Now for our big moment of the morning, and we have been telling you this since yesterday. The brains trust of JPMorgan India, Kalpana Morparia, the CEO, Bharat Iyer, the Managing Director and Head of Research, and Sajiid Chenoy, the Chief India Economist, are with us in the studio. Thank you very much, all of you. This is a very big moment for us at CNBC. We haven't always been graced with three people in the studio itself. So thank you very much for this. Mrs. Morparia, let me start with you. You've been such a veteran, seasoned observer of the Indian scene. You have seen, the upturn, the 5-year downturn from 97 to 2003, perhaps, and you were witness to the upturn at that time. Does it feel like that? Does the 2014 moment feel anything like the upturn in 2003?
It certainly feels like that. Certainly feels like a 2003 moment when sentiment was pretty poor. We were all worried about the bad quality of assets in the banks. How are we really going to cope with this? When is growth going to come back? It certainly feels like that.
Okay, but is the recovery that much at this point in time? Are NPLs receding? You all arrange a lot of, overseas loans and equity for beleaguered and not so beleaguered Indian companies. Are balance sheets getting repaired with decent alacrity?
So, Lata, if you just look what happened in the last week of May and first week of June, in a span of 10 days, $1.5 billion was raised by 5 highly levered companies. Okay. And so there is plenty of capital out there for the right investment. These companies cutting their debt and seeing growth in the very sectors come back very strong was a very, very strong pull for the investors to put in money. I think we are also at a unique situation now, and I'm sure Bharat will talk more about this. Typically, when you've seen a very positive sentiment coming from foreign portfolio investors, you've seen a lot of domestic institutional investors selling. Now, we've seen net inflows in the beleaguered mutual fund industry. And therefore, I think there's going to be a floor in terms of selling. And if this momentum that we seem to have kicked off over the last few months kind of continues, I actually see a secular uptrend in the capital markets.
Okay, on that optimistic note, good morning to all of you. Bharat, I want to get you in on the point that Ms. Morparia was making about the color of money that's coming into the market, not just with FIIs, but now domestic institutions are starting to get very optimistic. What's the sense you're getting? We've seen this market go through a consolidation phase for a bit. Is this just a pause before the next sprint upwards?
I would think so. I think, if you look forward, we'd expect gains of another 12 to 15% through to the end of the fiscal year. Because if you look at valuations, we're trading at about 16 to 17 times forward multiple, which is barely, ahead of the long-term average. And even if we presume that here onwards gains will be driven by earnings growth, we are going to see a pickup in earnings growth, about 12 to 14% this year and upwards of 16% next year. So even without significant re-rating, I think this market can deliver decent returns, which is the reason I think in terms of flows, bar a catastrophe on the global liquidity situation, I think India should continue to be favored by investors.
Now, did I miss any numbers? What are the earnings growth you are looking at in FY15 itself and more so in FY16? Are there any risks of downgrades at all in earnings?
See, we are looking at about 12 to 14% for fiscal 15. I think the street is marginally higher. And if you just saw what happened the current reporting season, numbers have been a little below expectations. But I guess the market's going to look beyond that. And if you're looking at FY16, I think 16% plus is very much on the cards, particularly given that we are looking at the economic growth accelerating very meaningfully from about 5.3, 5.5% to almost 6.5%.
Okay. Well, now to my favorite question to Sajiid. After the credit policy, I was a little confused as to what to expect in 2015 calendar.
Right.
The governor's fan chart still expects that inflation would be 8%. Maybe the best case would be 7.5% in the first quarter of next year.
Right.
And he wants it at 6% in January 2016. So where is the scope for rate cut? You cannot cut definitely till March because the best estimate is still 7.5% and your goal is 6%.
Correct.
And then it is also coinciding, as Bharat is saying, with a period of economic growth. And I have never seen rates being cut when the economy is on an uptick. So is there no down cycle at all? Is there no rate cut at all?
Lata, you're preaching to the converted. I think we've never been in the camp that rate cuts are likely to happen or frankly are needed to happen in this economy. I think to get from 8 to 6 will require a meaningful supply side response, which to their credit this government has indicated will be done. The fact is core inflation's momentum is down dramatically, reflecting the tight policies of fiscal and monetary. So I think the focus is keep on this path, let inflation gradually come down, and that becomes the basis for a sustainable pickup in growth. What you don't want to do is prematurely cut rates in 2015 only to have to raise them later in the year because you're off your target. So I think if the RBI stays on this course of, let's stay on hold, let's gradually disinflate the economy, that becomes the best prescription for a sustainable pickup, in my view, in investment over the next 2 to 3 years.
Yeah, and Morparia growth will come at, the base rate being at 9.5%?
Well, it has come in the past, as you know, when the base rate was significantly higher. I appreciate the point that the cost of capital in India is higher. But, the sheer need for capital investment in this country now and the returns that one is getting on that capital investment, I truly believe that we'll see a capex cycle come in very quickly. We also have to remember that the international bond markets are very, very attractive just now. This is a rare moment, and if I reflect on my 4-decade career in financial services, where both the equity markets and the international bond markets are as robust as they are. And we've seen some amazing deals get done, not just for the high-grade issuers, but even for the high-yield, single B-rated kind of issuers.
I think, Ms. Morparia, you hit the nail on the head when you talked about deleveraging, because, that's one of the most heartening signs that we've seen in the past 6 months or so, whether you talk about the JP Power deal, the JP Associates Birla Group deal. So do you see a lot more deleveraging take place in the next 3 to 6 months and a lot more balance sheet cleaning up by many of these, beleaguered companies?
Absolutely. I remember Sajiid telling us 6 months ago that even if the animal spirits come back and the Indian entrepreneurs really want to invest, where are they going to be investing from? They have highly levered balance sheet. I keep on reminding him and pulling his leg. Well, there is $1.5 billion in a 10-day period. And you've seen asset sales coming in. If you remember, Lata, 10 years ago, we didn't talk about asset sales. Right? We only said, how can banks restructure this loan? Can we get some interest waiver? Can we get some loan conversions? Today, I think corporates are very, very responsible to say, there is a growth that I have in a business segment. There are non-core assets that I can actually sell off, delever my balance sheet, raise equity, not as much worry, I'll get diluted. That's so much more opportunity on the other side. I'm not going to give that up on a fear that, my holding in a company is going to come down by 5% just because I've raised this capital.
Okay, now one final question on this NPL before we get to other issues. You remember, ma'am, in 2003, or was it late 2002, that big write-off and loss you all had to take on Jindal Ispat and SR, the steel loans. That big kind of restructuring we have not seen in the NPL books of banks.
Lata,
so is there one big tremor to come?
Without
gas stocks, power stocks?
Without getting into company names, let me assure you, when the long-term lenders converted a part of their loan into equity, they ended up making a higher return than if they'd ever carried that loan on their book at a higher interest rate.
I completely agree.
So wherever there are hard physical assets on the ground and the project suffers delay, there will be a small haircut unless you've converted into equity, and then you don't even have that small haircut. But I'm just not worried. I think this entire issue about asset quality within the banking system is completely overplayed. I've seen this story before. Yes. I've seen it in 1997. I've seen it in 2002, 2003. I think it's a completely overplayed story.
All right. I think on that note, we have to take a break. But we're going to come back and ask you more specific questions on what you made out of the budget, what you made out of the various policy announcements that have yet to come. All that in a minute with the Brains Trust of the JPMorgan team.